At this time, what we'd like to do is to talk about the different types of disability plans that are available. In a previous recording, we talked about the different kinds of policies that are available. Well, each one of those policies, of course, have a different kind of definition in terms of what is considered a total disability. So this is a situation of a total disability. So we're not, in a future webcast, we will be talking about the other partial disabilities and everything. But for our purposes today, what we're looking at is primarily a definition of total disability. So the first one is what we call any occupation. This, of course, is the most stringent one of them all, because let's assume, again, for our discussion purposes, let's say that you are entitled to $5,000 a month. Okay, so every month, once you become full disabled, you start getting a check for $5,000 every single month for as long as you're disabled. Now, you have an any occupation definition. The moment you go back to work and you're gainfully employed, even if you're only making $1, it doesn't really matter how much money you're making. The point is you are now back to work. So you are in fact gainfully employed, regardless of your income and everything, okay? Therefore, that $5,000 will in fact stop. So as I said, it is the most stringent type of thing in that you're either disabled or you're not disabled. So you can't perform any of your duties or most of your duties or whatever it is, that's fine. You're disabled. But if you go back and you perform any kind of duties, doesn't matter what it is, it could be totally different from what you were doing before, okay? It doesn't matter. You could be a different employer. It doesn't matter. The point is you are gainfully employed, and therefore that $5,000 will stop. So obviously it's a very, very black and white situation. You're either fully disabled or you're fully recovered, and that's it. So this one here is primarily for the blue-collar worker. In other words, the lower end of the marketplace and everything else. It's a high-risk type of market. And so once again, the insurance company is saying it's too high of a risk. We don't want to take that kind of risk. So therefore, we'll offer you an any occupation definition. And that way, we don't have to take on all the risk. Because if there is a possibility that the risk is too high, we can simply cancel the contract. The next one is regular occupation. This is an interesting one because in regular occupation, we're basically saying is go back to work. We want you to go back to work, okay? But we know that you're not going to be able to perform all your duties that you were normally doing before, okay? In other words, the normal functions that you were doing before, the normal hours you were working, the same kind of work that you were doing, In other words, you cannot perform your regular responsibilities or your regular occupation that you were actually doing before, okay? But we still would like you to encourage you to go back to work. So unlike the any occupation, which basically says we're going to cut you off, the regular occupation will in fact continue to pay you that $5,000. However, you have gone back to work. And so therefore, let's say your employer is paying you $1,000 a month for that, because you're only working, let's say, 1 day a week or whatever the case may be. So you are gone back to work, but you're only able to do, because of your ailment, you're only able to do, let's say, a certain amount of hours throughout the month, which generate $1,000 worth of income for you. Well, in that case, then that $1,000 is deducted. And so therefore, you end up with $4,000. In other words, in a regular occupation situation, it is basically a linear deduction. For every dollar the employer gives you, we will take off $1 from the coverage, from the $5,000 in our example. So it does encourage people to go back to work, so to ease their way without then necessarily suffering any kind of financial repercussion like you would here, for example. So the encouragement there is to get back to work. So over time, next month you start making, let's say, $2,000 a month, then we're still going to give you $3,000. So you're still going to end up with $5,000, except that obviously you're going to have two payers. You have the insurance company is going to give you money, and you've also got your employer giving you money. So you're still going to end up all right without suffering financially like you would here, where it's a straight cut off and that's it. The next one is what they call own occupation. And the own occupation basically says you cannot do your work, whatever that work happened to be. And because you cannot do your work, we will continue to pay you the $5,000 regardless of whether you're working at something else altogether. So an example, let's say you're a surgeon and you're driving down the road, you get into a nasty accident and you lose your arm. And so now that's the end of your surgery career. It's finished, basically. However, You can teach at the University of Toronto, let's say medical school, okay? You could be a manager of the hospital. In other words, you could do other things within your field, but you are no longer a surgeon. And we insured you, your occupation was a surgeon. So now you're a teacher, let's say, University of Toronto Medical School, or you're managing the hospital, or whatever the case may be, and they're paying you a full salary and all that sort of stuff there. But because you are not doing your own occupation, we will continue to pay you the $5,000 for as long as you are not able to do your own work. And that's very, very important. So you get situations where predominantly this covers professional people, okay, professional people. So like I said, lawyers, doctors, accountants, executives of companies, things. In other words, once again, that higher end market is who has this. So if you remember in a previous webcast, basically, we indicated that the non-cancelable policy basically is that high-end market basically buys a non-cancelable policy. Well, what goes into that non-cancelable policy will be the own occupation definition. So it gives the client the maximum possible protection for the premium that they're paying. So obviously it's going to be the most expensive product because, like I said, you're transferring all that risk over to the insurance company. The regular occupation, once again, will be essentially your middle management, white-collar workers, things of that nature there, okay? And the any occupation, once again, will be that cancelable type of contract, your blue-collar workers, high risk, things in that area. So these are the three most important types of occupations, classifications. And so when a person says, I do the following, that's what ends up happening is that the insurance company will classify you accordingly and then offer you one of these particular definitions that you will be able to buy. Okay, so a lot of times what happens in the exam, they will tell you, okay, this person was doing this, and this, was a doctor, was a lawyer, whatever it was, they got injured. They could no longer do their own functions anymore, and but they could do other functions. But they were no longer a lawyer, okay? But they could do other things. And they noticed that in this case, let's say the $5,000 was still coming in. What definition did they have? They had own occupation definition. So as long as that check doesn't stop, then you've got own occupation. If the check is reduced by the amount of money they make, then they have a regular occupation. If the check actually stops, then they have any occupation definition. So it is important that you look at it from that perspective. The other two that are very important is presumptive disability. And presumptive disability, this word here is very important right in here. It is presumed that you will never ever recover from your disability. So that basically means hearing loss, speech loss, eyesight loss, paraplegic, quadriplegic. There is no cure for hearing loss. There is no cure for speech loss. There's no cure for eyesight loss. Okay, once you lose your eyesight, you lose your eyesight, you lose it forever, and that's all there is to it. Once you're paraplegic forever, quadriplegic forever. So basically what we're saying is in a presumptive disability, it is presumed that you will never ever recover. So therefore, if we were paying you $5,000 a month, when you have that injury and everything. And then at the end of that injury, we discovered, in actual fact, you were going to remain as a paraplegic for the rest of your life. Even though you went back to work and you were fully engaged in your job and everything else, okay, we will continue to pay you the same $5,000 at all times because it is presumed that you will, in fact, continue to be disabled. You're not going to recover from that particular ailment. And so the presumptive disability is a very important one in that it really gives you maximum protection just in case you have a catastrophic loss, such as eyesight, hearing, and so on and so forth. Then even though you may be able to go back to work and work full-time and earn a regular income, and all those things are all the same now, but because you're never going to recover from that, because that's the presumption part of it, then they will continue to send you a check for $5,000, okay? Something to keep in mind on presumptive disability is that presumptive disability is not available on group insurance disability insurance, okay? In another video, we will be talking about disability insurance from a group insurance plan, but basically for our purposes today, just keep in mind that presumptive disability is only available on individual private policies. They're not available on group insurance policies. So one thing that's missing out of a group insurance policy is presumptive disability. All the other stuff will still be there, but the presumptive disability is not available on group insurance. The last definition I want to talk about is Canada Pension Plan, or is commonly known as CPP. Many people don't realize that CPP is not just a pension plan that you get at age 65, but in between all that, there are other benefits as well. And one of the benefits, of course, is the disability benefit. Disability. Remember now, Canada Pension Plan, you have to contribute to this. If you don't contribute, you don't get this. Okay, so this is a contributory plan. So if you are contributing, which of course most people who are employed, of course, do contribute to this. So if you have CPP and you do become disabled, okay, there is a benefit to you as well. The amount of benefit very much depends on how many years you'd be contributing, so there is a means test and everything, but that's beyond the scope of this particular session. The important thing to remember is, what is the definition? What constitutes a disability as far as CPP is concerned? And what constitutes a disability, and this is very important, is that your ailment must be severe and prolonged. This is the important thing. In other words, the disability you have is of nature that it is of a severe nature, and it's going to last a long, long time. So this is not a situation where you broke your leg, now you go into CPP or something, trying to get some money from there. That won't work, okay? It has to be a situation where the recovery time is going to be a long, long, long time probably, and it is of such a severe nature that you may not be able to do any kind of work at all. So it's very, very, very restrictive. Very restrictive type of, far more restrictive than any of these here. So this is quite tight in that. Not only that, is that the waiting period is 4 months. So as you can see, this is not something where you choose, say, well, I want a 30-day CPP or a 90-day wait CPP. No, it's standard 4 months waiting period. So your disability has to last, at the very least, it has to last 4 months. Obviously, it would be more than that. Is it's a better route to go. But what I'm saying is that this is not a situation where you pick and choose the waiting period. The waiting period is already set. It's 4 months. At that point, then the benefits will begin, and then they will pay you for as long as you're disabled. So the definition is of severe and prolonged. But also make sure that you understand that in all these cases here, you have to be under the medical care of a doctor, not a nurse, not a paramedic, an MD, a medical doctor. Okay, so if you are not being taken care of by an MD, because they have to do the reports every month or every quarter, however the insurance companies want, they will not accept a nurse's report. They will not accept a paramedic report, okay? The only report to prove that in actual fact you are disabled will be from a medical doctor, okay? So that is a very important component. So that basically summarizes really the different kinds of definitions for, again, total disability. In other webcasts, we will be looking at, of course, partial disabilities, things of that nature there. But for our purposes today, it is total disability. So we will leave it at that, and we will see you shortly.